Okay, hello and welcome to the LS Life School Commodity Corner. I've listened to our other preview show before. This is a new show. This is really focused on the commodity markets and the commodity and the assets, commodity asset focus on all things commodity related. Each episode will take a look at hot topics in the resources space and provide you with some insight and expert opinion on what to look for and what is happening right here and now. My name's Harry, and I'll be joined by Chris Stadley, Life School contributor and author of the Commodity Corner newsletter. Chris is a commodities analyst and trader with some 13 plus years of experience in metals, ags, and energies, as well as a world traveller and an avid F1 aficionado. And with that, before I introduce Chris, just to really dot the I's and cross the T's, just the disclaimer, the usual boring stuff. The content provided on this channel is for informational and educational purposes only. Life School is not a licensed financial advisor, and none of the information shared should be considered as financial investment or trading advice. Please conduct your own research, consider your own financial objectives, and consult a qualified financial professional before making any investment decisions. Investing and trading in financial markets carry risks, and past performance is not indicative of future results. LifeSwalk is not responsible for any losses or gains that may result from following the content on this channel. And with that, I'd like to introduce Chris. Chris, welcome.
Thank you, Harry. It's my pleasure.
Awesome stuff. Glad to have you on board. As I mentioned, Chris will be, you may have seen Chris, he's written some content for LifeSwalk platform previously anyway, and moving forward we'll be focusing on the Commodity Corner product, really just to bring, as I said, some valued insight into the commodity market space there. We're going to focus, as well as on what Chris will be doing, we'll have a quick look at that and understand really where he could add some value to you and the newsletter. We'll also have a look at the WASDE report, the USDA, US Department of Agriculture report that's due out tomorrow. And we'll go into a bit more about that shortly. Look at really what matters, because it's not only just the monthly reports we have that are pushed to January. We also have the quarterly data as well, and Chris will go into that in a bit more detail shortly. In fact, I'll tell you what we do. As I bring Chris back in, maybe we can go through I guess the USDA report and its merits, and then we can, as I said, we'll finish off with just a look at the wider commodity asset classes that we'll be looking at over the course of the next few months. So with that, Chris.
Yes, thank you, Harry. What we're going to be doing is tomorrow morning we're going to be putting out a little crib sheet regarding the USDA report that comes out. Yep, there it is, right there. This report comes out at 11 o'clock Central. That's noon Eastern, and I believe that is 1700 GMT time. So this little crib sheet will be coming out in tomorrow's email. And then after that report comes out and I have all those numbers that are in the blank left-hand column, I'll get that shot out as soon as possible. So this report, it's again, like Harry said, it's a combination of the monthly WASDE report, which is the monthly estimates of where we sit in relation to ending stocks for corn, soybeans, and wheat, and also the quarterly grain stocks, which, as the name implies, comes out once a quarter. Normally those come out on the March 31st, June 30th, and September 30th. Rather than having one that comes out on an odd date of December 31st, they roll it into this January report. So in a nutshell, this report is essentially like the Super Bowl of grain reports. And we can see some volatility coming in or out of that. So just be aware of that. I do not want to say, that, hey, we're looking for this to be bullish or bearish, but, as you can see by those numbers, based on the average estimates. None of those seem too wild for me. You know, I live very, very close to Chicago, so you know I get out in the country quite frequently, see what the corn looks like, see what the soybeans look like, and there is a heck of a crop out there. So you know, again, that is definitely reflected in these average estimates, as you can see here. So if that's okay, I'm going to dive into you know, just kind of what my further thoughts are, you know, coming into the next several months as you know, Brazil gets planting and likewise we get planting. Do you mind if I
No, mate, go for it.
okay.
Just in terms of when we get this report out tomorrow, just off the bat, the reaction will be to the quarterly as opposed to the monthly. Will people pay attention to the monthly as a secondary factor and look at the quarterlies predominantly off the bat?
Yeah, that's by and large correct. You know, the quarterly numbers are definitely more of a wild card because obviously, as the name implies, those only come out once a quarter. The WASDE, the monthly report or the monthly numbers are usually a little bit better to get a grip on. So, you know, that again, because you know they come out once a month. So.
Excellent. Cool. Okay, so yeah, you wanted to expand a little bit more on the other factors that we're going to see over the coming months.
Yeah, sure. Uh, you know, I'm going to tackle all of these in no particular order of importance. They're all relatively important. So, you know, kind of one of the big overhanging and all of these factors are some are, you know, new to the market and some aren't. So, kind of the first thing that's relatively new to the market is tariffs. You know, there's been a lot of chatter on, you know, CNBC and other channels on you know what Trump is going to do in relation to tariffs on China and other economic partners. That is definitely a wild card that nobody can really have a grip on until you know his administration really comes into play. So, money managers, they've become a huge factor in grain markets over the past several years, and currently they have their largest long position in corn in just over a year, their largest short position in soybeans since 2018,
Okay.
and they also have a sizable short position in wheat as well. So any little spook in any of those markets could you know add some volatility. As I mentioned from the outset, South American weather, that's become a huge dominant player in what the United States would call, you know, its late winter, early spring. Their weather got started off great late last year, early this year, but now it's just turning a little bit hotter and causing some early damage. So it's still a little bit too early to get too freaked out about that, but just something that we need to keep an eye on. And continuing on, Brazil and also the U.S. dollar. The stronger the U.S. dollar gets, that's definitely going to keep a cap on ag prices. And similarly, the Brazilian real is sitting at its nearly its weakest level ever compared to the dollar, which makes their crops cheaper relative to ours. So, and that favors major importers like China. So, you know, again, just something else that, you know, adds another wild card to it. And just kind of one last other factor here is our exports have been pretty good so far this year, but I think that's been mainly due to just seasonality. You know, they pick up, you know, as harvest is going on, but also the threat of tariffs is causing a little bit more to be sent to the export markets, you know, relative to history. So, you know, I know I throw a lot at you there, but you know, again, that's just still a lot, just you know, a handful of things that I'm looking at right now.
But I mean, just on the dollar picture, and as you said, we've seen the strength in the dollar really, and subversely, some of that is just down to the weakness of some of the pairs really that it's up against. How much of a stumbling block is that looking down the road, do you think, for farmers, exporting farmers, or intrinsically is the US agricultural market still very much a domestic market that grows and thrives on domestic demand over and above what it exports?
Sure. It's kind of a combination. I don't have the numbers right off the top of my head, but we are becoming a bigger and bigger export market, and mainly in relation to soybeans, and also corn. Has been historically an important one as well. So that's again why we need to keep an eye on the Brazilian real, and and again as the dollar gets stronger, that makes again these other currencies a little bit more attractive. So I'm hearing some thoughts on how well the Brazilian and Argentine farmers are doing, given how weak their currencies are.
Sure.
But again, they're mainly export driven. So again, that just plays into the hands of large importers like the Chinese and elsewhere. So
understood. Getting back to soybean as well, I've just been reading up on a Bank of America report, global research report, and they have their outlook and themes for this year. And they've got on the soybean front, they say with no weather risk premium embedded in prices, and given a combination of looming record crops, weak demand, and possibility of trade tensions between US and China post-elections, they've maintained a bearish view on the soybean market. They think prices should weaken into 2025, early 2025, I think, averaging $9.7 a bushel for 2025. I think early 2025, compared to the current forward price of $10 and to $10.20 rather a bushel. Mm-hmm. So just the bearish tone then from Bank of America Merrill Lynch on where they see soybean as well, and we can look at maybe corn and wheat and just give where we think some of these. Do you see any anomalies in any of what we're likely to see out tomorrow, or do the numbers, the forecasters generally get it quite right?
The forecasters, it's obviously kind of a mixed bag in relation to the forecasters. So I actually do agree with that assessment by B of A. And again, that's exactly why soybean prices are hovering right around that $10 level, give or take 25 cents. So right now, front month soybeans are hovering, I think, like 990-ish or so. So and that again is getting very, very close to where most farmers really can't make a lot of money. But that doesn't mean that we should see a significant rally, so long as they plant a heck of a crop here in the United States coming this year. Obviously, like I said, Brazilian and South American weather in general is a wild card over the next couple months. So long as none of those really, create any red flags, I do agree with that modestly bearish assessment. So, but again, there will be times, or there will be a shifting point where the export market for both us and Brazil will really come into play, and kind of put a support or a put underneath the market. So
fair play. Okay, good stuff. Any more about tomorrow's report that you want to look at? We're recording this on Thursday afternoon, so and we'll be pushing this out before the start of play tomorrow morning, on Friday morning rather, ahead of the report itself. But in terms of any of that WASDE report and the USDA quarterlies, is there anything else you want to focus on before we just turn to what you'll be doing and expand upon this new newsletter?
Sure. No, there's really nothing specific in tomorrow's report that I'm really looking at. Again, I'm most concerned, going forward over the next several months about, again, the currencies, Brazilian weather, and also spec traders. So those are kind of my big things on the forefront right now. So I think this report will get played out relatively quickly. So.
Okay, and in terms of wheat, I think analysts are looking for it to remain range bound for the most part between that $5-6 a bushel mark really.
Mhm.
So nothing spectacular really, unless it breaks out of that range.
Yep. I agree on that. Yep. So
Awesome. Okay. Well, look, before we finish today, I want to really just introduce you to the audience, introduce you to any existing as well as new customers we have. And just note this Live Squawk Commodity Corner will be free to air. We're going to try and push this as far as we can for the next couple of months. So take advantage, find out what it's all about before, it's behind a paywall as such. So, again, Chris, just tell us a little bit about what you want to bring and what you're trying to provide by way of a service and this newsletter.
Sure. So let me give just a little bit of background. Harry gave just a brief 1 or 2 sentence snippet on kind of my background. I'm originally from Southwest Wisconsin. In high school. I worked at several dairy farms. In college, I worked at a ranch out in Montana. My degree from the UW-Madison is in agricultural economics. And then my professional career, I spent almost 9 years as a ag commodity broker, serving farmers throughout the West and Midwestern United States. And then I briefly worked in the LNG markets, and I spent most recently 3 years in the metals markets, mainly aluminum, copper, and a little bit of steel. So, and then, in that time frame, I've, kind of run the gamut in some softs and energies, and, a lot of different other commodities as well. So that's exactly what this newsletter is going to be. We're going to be covering roughly 4 to 6 different commodities per week. So I'm already starting to get a grip on the one that we're going to hopefully push out late next week. We're going to cover soybeans. We're going to cover bonds. We're going to cover gold. And there might be 1 or 2 other markets in there as well. And this is going to be very lively as well. So 1 week we might cover, 4 different things. And then the following week it's going to be 4 or 5 completely different markets. So, we definitely want to keep this a must read for our subscribers. So, and make sure that never gets dull as well. So
Looking forward to it. I'm really looking forward to it. Again, it's one of the areas, my background's in financial markets and derivatives. And so I'll be keen to learn a bit more about what moves the commodity markets, and it's not simply the growing cycles and the weather, like you say, mentioning bond yields. Bond yields are having an impact on a lot of stuff right now. And again, the veracity of the moves more than anything else dictate the contagion to other asset classes. So it'll be really interesting to see you just expand upon that and give us a better understanding of where commodities sit amongst the other asset classes and that relationship and how that works as well. So looking forward to reading the newsletters and we'll get you on. We'll do this on a semi-regular basis where we can get you on and hopefully have some audience interaction and get some questions to you and just interaction with some of the experts in particular fields as well. So I think there's a lot of scope really to provide a lot of value to our audience, existing and hopefully potential. So yeah, really looking forward to having you on board and looking and reading and disseminating your content really. So onwards and upwards.
Thank you. Sounds great.
Awesome. And with that, we'll keep this one short. So just quickly recap on tomorrow's USDA report. So we're looking for 2024 ending stocks. Looking for grain market outlook, basically, from the quarterlies and from the January WASDE report as well. So that's what time? That's 1700 GMT. So what's that going to be? Midday Eastern.
Yes, that's noon Eastern and then 11 Central, my time.
11 Central, brilliant. And that should occupy us for at least a little while of the ag traders and so forth. And then we'll then quickly, that'll be after the non-farm report. So we'll have that to contend with as well tomorrow. We'll have a preview show of that as well ahead of the event. So yeah, please join us again, and please keep an eye out. We'll put links up on our socials for where you can access the Livestock Commodity Corner newsletter. It's going to be a weekly publication, yeah, we hope you enjoy it. So thank you very much. Thank you, Chris. Lovely to talk to you again, and yeah, we'll see you soon.
Take care. Thank you. It's my pleasure.
Cheers, my man. Bye-bye.